If you are a real estate investor, you own a home, you're buying rental properties, or you're looking to buy property here, land in this great Lone Star State, and maybe you can't get traditional financing, maybe you're self-employed, or maybe your credit isn't the best, and you're looking for a seller financing mortgage, then you need to pay attention to this video. Currently, the Department of Savings and Mortgage Lending here in the state of Texas are proposing rule changes that would make it harder to safely create seller finance transactions. Now, we have the opportunity to make our voices heard by sending an email today. And I'll give you a website that you can go to do this 3-step process. We're asking you to send an email following 3 simple steps before, and you're actually using the simple email that we provide. 1, to send an email to the rules department of the Texas Savings Mortgage Lending. 2, to copy the Seller Finance Coalition. And 3, to copy and paste the email that we have put together to help them have our voices heard. Now, they're requiring some of the things that make the most amount of, don't make any sense with this. Is the first thing is seller financing takes place a lot here. Actually, Texas is the largest state to have seller financing. We have roughly on average about 25% of all the seller finance transactions that take place, residential, commercial property, actually happen in the state of Texas. In 2022 alone, there was over 20,000 people that bought on owner financing, residential, commercial properties here in the Lone Star State. And what the Texas Savings and Mortgage Lending Department is stating that they want to change it for is now to require that all RMLOs, registered mortgage loan originators, have to be employed by a bank. They have to work for a lender. Well, that does not work. As an ex-mortgage broker, mortgage banker who worked for some of the biggest banks in the country, that's not a good thing, because many people who are selling owner financing, they're not using a bank. The people that are buying aren't using a bank. And when I worked for a bank, we couldn't do stuff that was outside of what we offered. All right, we didn't do owner finance transactions. So if you require that an RMLO work for a bank, that is going to eliminate over 20,000 people that can buy a house just on average in the state of Texas. Okay, now it also is going to make home affordability even worse. I mean, the Mortgage Banking Association recently came out and said that we're at the highest level of home unaffordability ever. Now, if you eliminate the opportunity for people that have banged up credit, or maybe they don't conform to exactly what JP Morgan Chase or Bank of America or Wells Fargo or Citibank wants, they're not going to get financing. They're not going to be able to buy a house. This is going to make their opportunities to be able to go in and achieve the American dream even smaller. It's going to make it even more difficult for people to buy houses out there. And here's the thing right now, too, requiring that licensing aspect is going to put a lot of RMLOs out of business. We're there to evaluate the deals. They're there to make sure that the seller is not doing anything unscrupulous, making sure that the potential buyer of that property or the borrower can afford it and follow through based on what Dodd-Frank put in place after 2008. Now, there's so much stuff out there. We don't need to make this more difficult. And this is a regulatory body, not a legislative body. So we need for you to reach out to these folks and tell them, no, we don't want to do this. Now, I'm going to read the letter to you here, basically, so you understand exactly what we're talking about, because it explains it. When you send an email to these folks, you want to personalize it. Hi, my name is blank, and my business involves owning real estate in Texas, or selling property in Texas, or trying to buy on an owner finance deal. We help people who otherwise would not be able to own a home or buy land, make the dream a reality by doing blank. And this is what I do. We buy notes, we help people structure deals, all that stuff. Texas leads the nation in the area of seller finance. Up to 25% of all seller finance notes originate in the USA are done in Texas. The current economic trends are resulting in a growing number of seller finance transactions for homes or unimproved land. Okay? Why is seller financing so important? Seller financing is important for individuals and families in Texas that want to buy a home and who find themselves in one of these circumstances. One, they don't have W-2s or 2 years of work history, or 3 years of filed business tax returns because they recently started their own business. Number two, they are seeking a small loan and therefore face very expensive bank mortgage fees. Banks don't want to do loans under $125,000. As an ex-banker, we were discouraged from doing loans under $100,000 because the bank wouldn't make any money on that, okay? And because they have fixed underwriting costs and you can only charge up to like 4% of the full loan amount in fees, and that includes title, that includes appraisals, that includes other surveys and things like that too for you, okay? Number 3, the house or land is in a rural area. Banks don't like to lend outside of cities. Or maybe it's on a property type like a mobile home on land, or a mobile home by itself, or other places, or land that's unimproved, okay? Banks don't like to lend on unimproved land. There's only a few amount of people out there. Now, currently, there are numerous proposed rule changes that would harm Texas home buyers now and in the future, particularly those that are currently not well served by the financial services industry due to demographic and economic factors. These proposed rule changes will also hurt numerous small business owners and private home sellers. 2 examples of harmful rule changes are, A, the department's new regulation requiring that all RMLOs agents work for a bank or mortgage company harms Texas citizens in multiple ways. RMLOs can no longer be self-employed despite their own efforts to become licensed professionals. All prospective buyers must now seek to fit within the narrowing loan requirements imposed by banks and mortgage companies. This denies access to credit to many hardworking people who are A, self-employed, B, buying vacant land, C, have lower incomes, and D, using multi-generational resources to qualify for home ownership loans. And I'll tell you, people that do buy on owner financing often are some of the best borrowers out there. They're personally vetted in the property and are often going to be some of the best borrowers out there. 3, it also means private individuals or small businesses that already own homes or properties cannot hire an RMLO to qualify potential buyers as part of the seller financing transaction. This prevents such sellers from complying with Dodd-Frank. B, to legally meet the growing demand for non-bank financing on homes and vacant land, numerous individuals rely upon seller financing. Private individuals or small businesses in Texas who offer seller financing for homes or land to other Texans frequently use independent RMLOs. Using these independent RMLOs protects both the buyer and the seller. Given these facts, the following proposed language in 56.100 licensing requirements is rather harmful. However, if the lender owns the residential real estate securing the loan and has exceeded the limit for exempt transactions provided by Finance Code 156.202 A1-3, the lender must be licensed under Finance Code Chapter 156, regardless of whether the lender has secured the services of originator. This proposed verbiage goes beyond the SAFE Act and Dodd-Frank requirements and imposes a harsh scarcity penalty on disadvantaged buyers by severely restricting the number of properties that a non-lender seller can use seller financing on. This harsh and unnecessary restriction on what private citizens of Texas can do and sell with their own houses and land is unwarranted. In a time of shrinking inventory and rising demand, removing assets and liquidity from the marketplace is harmful to all of Texans. The Mortgage Bankers Association recently came out and stated that we are at the highest level of home unaffordability. By doing this, you would eliminate right there 20,000 plus transactions that took place in 2022. That's 20,000 sellers and 20,000 buyers. You would be affecting 40,000 people from achieving their dreams. Here are some reasons an individual or small business will hire an RMLO agent as part of the seller finance transaction. The RMLO ensures that all Dodd-Frank regulations are followed for both the lender and the borrower. The RMLO agent makes sure the homeowner is economically qualified to buy, has the ability to pay, and understands the specifics of the loan. Not using an RMLO allows unsavory lenders to take advantage of naive borrowers. And D, not using an RMLO may cause individuals or small Texas business to unknowingly violate Dodd-Frank, a federal license, and face federal charges and or penalties that could cause financially duress or unintentionally destroy and close small Texas businesses. We need your help. If you're watching this, please share this video. I'll put the link to the website. Once again, we need you to take 3 actions. Send an email to the Texas Savings Department lender. Use a job, BCC, the Seller Finance Coalition, and C, copy this email, add your specifics to it, and send it in today. We need your help. We have only till July 12th at 5 p.m. to get this in. Thank you, and God bless Texas.